Okay guys, welcome back to Libertas Trading and welcome to the event preview for ISM non-manufacturing or ISM services for the 5th of November 2025. So we'll keep this one nice and brief today. It's going to be very similar to the ISM manufacturing if you watch that preview. We're going to be focusing on this data point more just due to the data blackout for the US dollar, for the US economy at the moment, due to the government shutdowns. This will be more important than the manufacturing print because the services makes up about 80% of the economy. So definitely something to look out for. So let's just head over to the trade scenario sheet to see what we're looking at trading. So for a dovish reaction, we're looking at 48.4 or lower, which is below the prior, it's into contractionary territory, it's below the minimum, and it's also the lowest since June of 2020, which could create quite some headlines. And then for the hawkish reaction, we're looking at 52.4 or higher, which is above the max, above the prior, and the highest since March 2025. For prices, we're looking at 66.9 or lower, which is below the prior and the lowest since May 2025. It's still very high, but would show prices moving in the right direction or price sentiment moving in the right direction. And then for a hawkish reaction, we're looking at 71.0 or higher, which is above the prior and the highest since August 2022. Again, that would be quite the headline. So for a dovish reaction on employment, we're looking at 44.9 or lower, which would be below the prior and the lowest print since January of 2024, which should be enough to spook the markets. And then for a hawkish reaction on the employment figure, we're looking at 50 or higher, which is back into expansionary territory, above the prior and will be the highest since June. And then for new orders, we're looking at 47.9 or lower, which is below the prior, back into contraction and the lowest since June. And then for a hawkish print, 53.0 or higher, which is above the prior. Business activity, we're looking for minus or below 47.5. And then we're looking for above 52.5 for a hawkish reaction. So just a quick explanation on the ISM services, very similar to manufacturing. So in terms of levels of importance, we've got 5 different subcomponents here. I would put the main PMI and the employment subcomponent as the most important. So they're the ones I'm mainly focusing on. And then I put prices next, followed by new orders and then business activity. So basically when the data comes through, we're not looking for all 5 numbers. In an ideal scenario, we'd love that, but very rarely does that happen. So we're not looking for all 5 numbers to come below these, but we're looking for a miss on aggregate with ideally the PMI and the employment coming in below these figures. And again, on the hawkish reactions, we're looking for a beat on aggregate with the main focus being on the PMI and also the employment, with prices paid coming in a close third. So just a quick example from ISM services, it's very difficult that we get everything coming perfect. Very rarely do all the stars align. So I'll quickly show you some past data to explain and prove that. So here's my data for the services numbers. And as you can see here, we had a mixed print in October, mixed print in September, mixed in August, mixed in July, mixed in June. May came in quite hot, but it wasn't anything special. In April, they all come in red, but again, nothing special. Same in March, all came in green, but nothing special. Mixed. Here we had a bit of a mixed one as well. Mixed, 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 and these all come in green. So it just shows that you don't need everything to come in perfect for a trade, but in an ideal scenario, that's what we're looking for. So just to show you some examples. So back in May, we had this quite nice print here with the PMIs coming in higher and above the max. We had a really high prices paid, and then employment and new orders came in, fairly nice as well. But you can see here that we pushed up within the first minute for price to completely reverse. So just to show this on the 5-second chart. Again, we pushed higher in the first sort of 5-10 seconds. I waited for the spreads to cool down a little bit and try and get in around these levels. But, you probably would have got taken out of break even on this one. So, of course, this was in May. So it was around Liberation Day where markets weren't trading best around economic data. But, this was the last tradable reaction, and just seeing how we reacted here on the lower chart. If price does reverse, I will be taking my money off the table. I'm not going to be taking any extra risks today, and I will be keeping my risk a little bit lower. And also, due to the short reactions we've been having in ISM services, I will just be looking for a scalp on today's print. So just looking at the tradable reaction before that, takes us to December of 2024. So this is a prime example here of why you don't need to wait for all the stars to align, but you do in an ideal scenario. So we had PMI, which came in well below the minimum. We had employment, which came in a little bit lower. New orders came in quite low. And then the prices paid came in a little bit higher. but we did see a fairly nice reaction from this one, so this would have been worth holding. Let's look at the 5 second chart. So yeah, not an amazing reaction from a scalp, but if you got entered around 10 seconds and you put your stops just above your entry level, you probably would have made some money if you had the bottle to hold. But again, it wasn't the best mover. And if we actually head to the euro chart, again, we can see from the same print, we had some quite nice price action, but yeah, nothing special. And then just going back to the 3rd of July 2024, which was it's almost 18 months ago now, 16 months ago, whatever it is. So we basically had a perfect print with the PMI coming in really low, prices paid coming in just below the consensus, employment coming in nice and low, new orders coming in very, very low. And, we did see, this is a perfect print. For ISM Services, you're not going to see much better than this. But we peaked, or we hit our low after 13 minutes. So when I see data and I see an absolutely perfect 5-star print and I see this sort of reaction, it's not something I want to be getting into long term. So definitely wouldn't blame you if you wanted to, hold some US dollar longs, for example, because I quite fancy US dollar longs at the moment, especially we'll talk about in a second, Aussie US dollar shorts and cable shorts. But, just based on past price action, I won't be looking for anything longer term from the back of this print. And then for anyone interested, this was the 5-second reaction of that last print we just looked at. So again, really, really bad print for the US economy. Dollar yen moved lower nicely. Again, sort of waiting 5-10 seconds for that entry, getting in straight away, you would have got shafted. You're probably looking at getting filled down 160, 125 somewhere. So, it did paid about 25 pips in this example to wait 10 seconds. So I will be waiting for the dust to settle a little bit before entering. And there we have made a nice move lower. So we can get some nice moves from ISM Services, but we really need to wait for all the stars to align. Yeah. Anyway, looking at some medium-term plays. So this will be exactly the same as my ADP scenario sheet. So I won't go into too much detail here. But yeah, for medium-term plays, so we've not had the best reactions from this data set in the past. So I'll be sticking to short-term plays, but dollar longs look the better play over shorts after the more hawkish than expected POW and solid momentum. So yeah, the dollar's been trading really nicely. So it could be worth looking at some dollar longs over dollar shorts. So for a dovish print, I'd be looking at US dollar, Japanese yen shorts. There's not a currency I prefer to buy over the dollar at the moment, but currently the yen is the strongest on the day. Yield differentials point to downside in the pair. We're up at the 155 level, which is pretty important, and recent jawboning from Bank of Japan officials and currency diplomats could keep yen sellers at bay. So let's quickly look at the dollar yen chart. So yeah, apologies. I wrote that about an hour ago, and since then the yen sold off a little bit. But yeah, my opinion doesn't change. I'd still look at selling the dollar yen. If we just zoom out of this chart a second, we can see this really important 155 level, which certain research institutions have named as being a current area for yen intervention, which I don't really see, to be fair, but I think they were calling that a few weeks ago when we were down at the 150 level. So, next it'll be 160, we'll get there, they'll be saying 165. So wouldn't read too much into that, but still, all this jawboning will make dollar yen buyers a little bit more cautious. Head into a hawkish print, cable shorts. As everyone probably knows, my favorite currency to sell. We've got weak inflation for the UK economy. We've got the BRC shop price index, which came in really low last week, which caused an oversized pound sell-off. We'll talk about that in a few weeks. We've got the upcoming budget, which is expected to be negative for the UK economy. We saw the pound sell off on that yesterday on some Rachel Reeves talks. We've got stagflation risks. We've got low growth. We've got a weak labour market. And we've just broken below a massive support level. As I also said, for the US dollar, and this goes for both pairs, of course, we had a more hawkish Fed last week, which, that strength has continued into this week. So just looking at the cable chart, here we go. So yeah, we broke down below that 130 level, which was, a solid area of support up there. And now we're breaking down. We're already at 130. So this selling off pretty hard. I'd probably be looking at 128, 127 for taking profits. If you wanted to hold for a bit of a, for the rest of the week and maybe into next week, that could be a nice place to look at. We do have the Bank of England on Thursday, on tomorrow, and I am expecting a bit more of a dovish tilt, which I'm sure is already priced in, but that could see the pound sell off as well. And then just for the Aussie US dollar shorts. So for the Aussie dollar, even with hot quarterly inflation, with the US China trade relations calming down and a more hawkish than expected RBA, the Aussie can't catch a break, hasn't moved anywhere. Of course, a lot of that's due to the risk off we've had in markets, but I still think with all that good news pricing for the Aussie dollar, if it's not moving higher, then what's going to make it move higher? So I quite like Aussie shorts at the moment. I won't bother showing you that chart because it's really boring. And then on scalping plays, so equities haven't reacted great over the last few prints. So I will be sticking to FX unless we see the perfect Goldilocks print or the perfect stagflationary print, as we spoke about up here. So for the dollar yen, I'll be looking at a 17 pip target. For the euro US dollar, I'll be looking at a 12 pip target. And then for the SPX, I'll be looking at a 7-point target. And as I said, stagflationary print or Goldilocks print, I'll be looking for a trade, but it would really need to come in perfect for me to trade stocks at the moment. We have had some massive sell-off in stocks, and I don't fancy selling them, and I don't fancy buying them right now, especially not on the back of ISM services. So something that I'll be avoiding. So as I said, reactions to ISM services have been mixed in the past, so I'll be keeping risk a little tighter on this one, risking only 50% of the normal position size. It's hard to know when to enter, but in general with ISMs, if the print is good enough, the market should move in the right direction. So if all the stars align, I'll be looking at entering within the first 5 to 10 seconds, avoiding pre 5 seconds because you can just get shafted on the spreads. It's well worth taking your time to digest all the data. There's a lot of it. So that's it for the ISM services preview. I hope you enjoyed it. Good luck, and any questions, please give me a shout.